Hello, everyone. John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Thank you all again for tuning in. And I want to say a big thanks to all the viewers and subscribers that watch these videos and leave your great comments. Like most of the comments I get are like very positive and supportive of what I do. There are the negative ones or the people that obviously don't agree with me or disagree, and that's fine. Disagreement is good. For the most part, they're pretty fair in their arguments or debates with me. I try not to get into it too much, but I just want to say that a couple of the, I guess the things that they would say, and I want to address this because it's something that needs to be addressed. Would be I'm the doomsdayer narrative, or the world is ending narrative, and this is the way I kind of approach these videos. So I'd like to put that into perspective and say, actually, the doomsday is not prices falling and the real estate market crashing. The doomsday is prices continuing on their path upward or at an elevated level. Even if they don't go up, if they just stay at this elevated level, it's 9 to 10 times the average household income is the average price of a house in Canada, and it should be historically 2.5 to 3.5 times. So it's not a sustainable thing. So I guess my point is that I'm going to keep fighting and stick to my narrative until house prices are affordable for average Canadians. I'm not just sticking up for the sellers. I'm sticking up for the buyers too. And, high house prices doesn't do owners or sellers any good, I guess, unless you're an investor with a big portfolio. But again, I'm not about that. I'm about the end user and families. So yeah, until that point comes, I'm going to keep producing the evidence to show why we are in an overpriced market. Now, I want to point out the flip side of that coin, where a lot of professionals or people in the business or affiliated with the real estate and mortgage business, they're kind of promoting the market. They don't look at fundamentals about affordability. There's actually never any talk about affordability when you hear people talking or industry professionals talking about the market. And here is a good example of how it's biased on the other side, or the narrative that we need, strong sales and high prices. From Global News, April 13th, hoping to buy a home, Canadian prices forecast to rise by end of 2023. In its latest forecast released Thursday, Royal LePage adjusted its price forecast for 2023, given stronger than expected demand and limited supply. The brokerage now predicts that national home prices will rise 4.5% year over year by the end of 2023, instead of dropping 1% in 2023, as it had predicted in December. So this is a perfect example of a bias on the other side. When prices weren't doing so well, and, we were into that market crash, or the possible big market crash, their forecast was, 1%, by the end of the year of the 2023. And now that prices have turned around for the spring, which is a temporary condition, in my opinion, it's going to be 4.5% up by the end of the year. So, 1% down, but 4% up, or 4.5% up. So again, it's and there's no data there to back this up. This is not an economist. This is, the CEO of Royal LePage. So of course, where their interests lie. One more article before I get into the national stats. And actually, I do have the stats from some of the places I missed last week also. But anyway, check this one out from the Financial Post. And this kind of sums up where we are in the market right now in this spring market. Canada's housing market is showing green shoots, but something is missing. We're back in a seller's market for the first time since April 2022. Lots of talk of green shoots, as you'll see later. There's another one. So I have green grass behind me from my backyard that's shooting up. So I thought that was appropriate this week. But while buyers are returning, there is still something missing: sellers. A complete lack of new listings is the big story now, writes BMO senior economist Robert Kavcik. So I would have to agree that right now it is more of a supply issue than a demand issue. We have such low supply that it has elevated prices, and of course the spring market contributes to that too. Kavcik says in the past, housing downturns have evolved from a price correction into a crash, like the housing crisis in the United States in 2008 or Southern Ontario in the 1990s. Have been driven by forced selling. That isn't happening this time, and there are several reasons why, he said. Potential sellers don't want to sell in a down market, and this time they don't have to, thanks to a strong job market and limited mortgage delinquencies. Banks are giving homeowners on variable rate mortgages a buffer by stretching out amortization instead of hiking payments, as rates have risen from below 2% to above 6% during the Bank of Canada's aggressive rate hiking cycle over the past year. The Office of the Superintendent of Financial Institutions made sure most buyers were stress tested. Even those who took out mortgages at 1.5% had to prove they could handle rates in the 4.75% to the 5.25% range or higher. A strong rental market is making it worthwhile for investors to hang in there, even as cash flow worsens. Swallow a capital loss or hang on. Many seem to be hanging on, said Kavik. So I thought that was a great summary of where we are in the market right now and why we have a lack of listings. All right, let's move on to some statistics now. Let's start with the Canada New House Price Index. As you can see, it has been trending down for the last few months. Moving on to the mortgage arrears, the last data we have is January 2023, and you can see it looks like it bottomed out again a few months ago, and it has been trending up since. Now, the mortgage arrears doesn't include private lenders, and a lot of the power of sales I've seen and the delinquencies are from private lenders this time. As you know, the big banks are kicking the can down the road with extended amortizations. And the power of sales or bank sales on my board, here they are over the last 5 times I've checked. I check every 2 to 3 weeks. Last time I checked was last week, and there were just around 22 power of sales on the system. So down a little bit from the weeks before. I don't know if that's because of the uptick in sales or if it's from people kicking the can down the road again, the big banks, right? National statistics. Canadian home sales continue to rise in March as markets tighten. Home sales recorded over Canadian MLS systems posted a 1.4% increase from February to March 2023. The small rise built on an increase of the same size in February, marking the first back-to-back monthly gains in more than a year. The actual number of transactions in March 2023 came in 34.4% below a historically strong March 2022. The March 2023 sales figures were comparable to what was seen for that month in 2018 and 2019. Hey, I like the sounds of this. We're starting to compare sales to 2018 and 2019. I think at some point we might be comparing prices in the future. So taking a look at the sales activity and actually the new listing activity in a second, we can see they actually reported it by quarters now. They didn't include March by itself. So this is why I'm using quarterly data. And based on the information they provided, not including Q2 in 2020 because of the pandemic, obviously, residential sales activity or number of sales came in almost 26% below the 5-year average. So again, the way they report the numbers, they're kind of comparing year over year and then saying, well, this is a really good year last year. Well, so let's take the 5-year average based on the data that they've provided. Now let's compare that to the new listings. So again, reported quarterly this month instead of just March by itself. New listings are 18% below the 5-year average. So looking at them side by side here, you can see, yeah, new listings are down 18% over the 5-year average, but sales are down even further. So I guess that kind of leads to 2 questions. Are sales down because of lack of new listings, or are listings down, but sales are down even further, kind of showing that how weak the market is right now? As the spring market heats up and it looks as though some buyers are coming off the sidelines, it's important to remember that the intense market conditions of recent years have not gone anywhere. They've just been on pause, said Jill O'Dill, chair of CREA. With buyers re-entering a market with historically low supply, homes are not only selling, but selling faster. So I'd have to disagree to say that what happened last year in February 2022 has been on pause and now it's returned. It seems to me that it's, an active spring market, but it's nowhere near what we've seen. Like, we list places and I've seen listings come up and they're not going over around here, where last year they were going over 100,000, 50,000. And our percent of sale price to the original list price was like 114% or something. It's still like under like 98 at this point. So I wouldn't lead in to say that, these conditions from last year have returned, especially not with 4.5%, 5%, fixed interest rates. The 2023 spring housing market is getting going after a tough 2022. And the green shoots, there's those green shoots again, continued to pile up in March, said Sean Cathcart, CREA's senior economist. Sales are trending up. Markets have tightened considerably. The Bank of Canada is on hold, and the MLS Home Price Index is stabilizing across the country. That said, the supply issue is still with us. New listings are at 20-year lows. The number of newly listed homes dropped a further 5.8% on a month-over-month basis in March. So again, always back to that lack of supply, and it makes you wonder, is the lack of supply the only thing supporting the housing market at this point? Back to some more stats. This is the year-over-year percentage change, and it is now negative every province in Canada. Here's a quick look at the residential market balance. The blue bars are months of supply. You can see it did trend down in March here and actually February too. I expect that to rebound back up once more supply comes on, and more supply will come on in the spring market. It's just February is always historically low supply and increased sales. Quick look at the residential price in Canada. I'm going to show you my own chart now based off the same numbers. So here is the national average in Canada. It went up 3.6% month over month from February to March this year, or $24,000 for the average house. It is down 13.8% from last March, or $110,000, and it's down 15.9% from the peak, or $130,000. So there has been a spring market rally, which has helped recover some of those losses in sale prices. And again, looking at the head and shoulders pattern here, you can see the right shoulder. It is starting to reach the top. Looks like either April or May, it will turn down and create that nice right shoulder. This next chart's pretty interesting. It is the national average price by month, same as the other chart I showed you with the green line, but it's in a bar chart format. And I just wanted to point out all those big peaks or month over month gains in prices. You know, you go back to 2017 there. We had some pretty good month over month gains, and look what happened after. Next one is 2021, big peak up, and prices decline into the summer. There's last year, the big one at the top, huge drop down. This year, we've had a pretty big increase, and I think I know what's going to happen after. This is looking at the actual monthly gains by percent. And again, on the left there, you can see we're just over 10% in that 2017. And then you see negative prices come shortly after that. I have a big X through the pandemic because that was not a regular year. The next big spike up, almost 10%, was in 2021. And that biggest blue bar is February. Again, all the bars in those ovals, the big blue bars, are February's. And you can see March was still up month over month, and then into April in the summer, it was negative. Same with last year, big spike up month over month, 8%, 9%, whatever it was, and big losses into the summer. And this year, we've had a big spike up. March is not as great, still positive, but I think we're going to see some negative month over month changes in the very soon coming months. Okay, so that's it for the national. I do have area specific here. Let's take a quick look at them before I finish this video. This was from, I missed a lot of the East Coast. PEI still didn't have their numbers out, but I did get most of the East Coast and a couple other areas we missed. So let's take a look at it. Here is percent decline from the peak for the areas I missed last week for March 2023. Chatham, Kent in Ontario leads the declines. They're more than 20%. Looks like they're about 22% from the peak. Renfrew County, Chilliwack in BC they're down almost 19% from the peak. Sudbury, 16% or so. Northern BC, they're 14%. Winnipeg, about 13% from the peak. Nova Scotia, 13%. Newfoundland and Labrador, they're down almost 12%. And Moncton and St. John fared the best. They're down between 5 and 10%, so about 7 to 8% respectively. And looking at it in dollar figures from the peak, Chilliwack and District, I think it was 178,000. Chatham, Kent, around 120 grand. And we go down to Sudbury, 80,000 or so. Northern BC, 60. Winnipeg, 55. Newfoundland and Labrador, around 35,000 or so. And of course, New Brunswick, both areas reported there. Moncton and St. John had the lowest dollar declines from the peak. The month over month from February to March, Newfoundland actually had negative price growth. Same at Chatham, Kent, and Sudbury. Nova Scotia, Chilliwack and District didn't have much growth month over month. Northern BC, Renfrew, and Winnipeg had some pretty significant, 3 to 4% month over month. And New Brunswick, now they don't have a big data set in New Brunswick, but they had, St. John, they have a very small data set. So it's pretty volatile month to month, but 20% month over month and almost 10% in the greater Moncton area. Some pretty big swings there. I know there's a lot of people moving from Ontario to New Brunswick. I just actually had a client right now that sold their house, and there was a few last year. So I know there is a big influx for more affordable housing from the Ontarians going that way. New listings are down usually over 20% for most areas. Chilliwack and District down almost 50% for new listings. Chatham, Kent had actually increased listings month over month. And the number of sales are down in all areas. Renfrew County leads it with almost 50% decline in sales. Northern BC, Nova Scotia, Sudbury, and St. John, New Brunswick, between 30 and 40. Winnipeg, Chatham, Kent, Vancouver Island, Chilliwack, Newfoundland, and Labrador, between 20 and 30%. And Greater Moncton, only 14% or so decline in sales. They're a pretty strong market, as I just stated. Okay, that's all for this week. Thanks again for watching. Of course, leave your comments and everything below, and I'll see you next time.